I saw just today that Citi is calling for $40 silver in the medium term. That's pretty bullish from, your kind of mainstream investment bank. And I can't remember who, but there were some calls from some of the larger banks as well, U.S. banks, for, us to head towards $3,000 gold. Remember, these have been sort of the most conservative and the least precious metals, the least sort of strong precious metals advocates you can imagine for the last decade or two. And now we're hearing calls for these metals to go considerably higher. So to me, that adds to my outlook in the very near term to be cautious. And again, I'm not here to kind of rain on anybody's parade. If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term.
Major banks expect gold to extend its record-breaking price rally into 2025 because of a revival in large inflows to exchange-traded funds, ETFs, and expectations of additional interest rate cuts from prominent central banks around the world, including the U.S. Federal Reserve. Gold has proven to be a compelling long-term investment, demonstrating robust returns over several decades, particularly since 2000. The 5-year compound annual growth rate of gold prices during this period, especially post-2000, underscores its attractiveness as a long-term investment. Despite occasional corrections and short-term volatility, the overall trend has been positive, reflecting an average annual growth rate that has outpaced many traditional assets over similar periods. A notable expert on precious metals and author of The Great Silver Bull, PeterKrauth, expresses surprise at gold's recent surge, noting the steady rise of several $100s. He advises caution, suggesting that markets rarely move in straight lines, and a pullback could present a tactical buying opportunity, especially in gold equities. With gold still on track for its 7th consecutive month of gains, its trajectory appears strong. Yet, signs of an overbought market suggest a period of consolidation might be just around the corner. According to Krauth, mainstream institutions have shifted their stance. For instance, Citibank now predicts $3,000 in gold and $40 in silver. Aligning with other respected analysts, Peter advises a careful approach as enthusiasm builds. Given the current market dynamics, Bank of America Corporation's strategy focuses on capitalizing on the relative strength of silver compared to gold, recommending short positions in gold while targeting significant levels in silver. Now we present the clips of PeterKrauth's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I'm actually a little bit surprised myself, to be honest. It's been a pretty relentless climb, gold in particular. We're looking at over the last maybe 4 or 5 months, several $100s just being tacked on very, very steadily. And it's quite the rise. I mean, if you look from start of the year, I think we're about 30% up in gold, which is really tremendous. We're only about 9 months in. And so I'm getting a little bit cautious, to be perfectly honest. That's what I'm telling my subscribers, that it's great to see. It's what we have been expecting for some time, but these things don't happen in a straight line. And I think actually, if I remember right, when we last spoke, I may have already been kind of indicating, my cautious outlook, because I think that we are probably going to see some kind of, at the very least, a consolidation, so a move sideways, or perhaps even a correction. I don't think it'll be very big. It's not something that would cause me to sell in any way, shape, or form. But it's something to keep in mind, and that obviously the equities would leverage that to the downside if it's a correction versus a consolidation. And so if anyone's looking to maybe add in the near future, I would do it kind of tactically. I'd be watching quite carefully. And, again, I could be wrong, but I think that I would be mostly waiting for a potential pullback. So, I mean, I think something like maybe that we're headed for one is bigger and bigger calls are from more and more mainstream outlets that gold is going to 3,000, that kind of thing. We've actually seen that in the last few days a little bit. Now, I saw just today that Citi is calling for $40 silver in the medium term. That's pretty bullish from, your kind of mainstream investment bank. And I can't remember who, but there were some calls from some of the larger banks as well, U.S. banks, for us to head towards $3,000 gold. Remember, these have been sort of the most conservative and the least precious metals, the least sort of strong precious metals advocates you can imagine for the last decade or two. And now we're hearing calls for these metals to go considerably higher. So to me, that adds to my outlook in the very near term to be cautious. And again, I'm not here to kind of rain on anybody's parade. If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term, it's wise to be cautious. And I've seen other analysts that I'm very hold in a very high regard, and they're starting now to say very similar things. So I feel like I'm in good company that way. I still think we're the minority, but it's the contrarians that tend to over longer term, do better. So another sort of reason to be cautious here, I think.
During the interview, PeterKrauth predicted that as industrial demand remains steady, particularly due to sectors like solar energy, the smaller portion of silver available for investment could trigger a price surge. He expresses that if investment demand spikes again, like in 2021, a silver squeeze could occur, pushing prices even higher in the coming years. Since 2021, there has been a deficit of silver due to demand exceeding supply. Strong demand combined with tepid supply increases led to a deficit of 185 million ounces in 2023 and is expected to lead to an even worse deficit of 215 million ounces in 2024. This condition has helped to boost prices and should continue to do so for the foreseeable future. Industrial demand is strong due to the increase in solar panel production in China. However, this demand also extends to India, which plans to quadruple its production capacity by 2027. In regard to this, Krauth explains that silver has increasingly shifted from being a monetary metal to more of an industrial one, with a current split of around 60% industrial use and 40% investment demand. Let's get back to the interview.
It's true that it has become less of a monetary metal. And so a couple of thoughts around that. One is that if you look at what happened, I believe it was 2021. If you look at the statistics that are put out by the Silver Institute, the investment demand for silver was off the charts. It was more than we had ever seen before. It was something like 330 million ounces, I believe. That was a third of the entire supply of silver for that year. So it can really come in waves. The other point that I want to make is that, and it is the case, I do believe it's the case that we're sort of in a new paradigm, so to speak, where silver has become and is becoming more and more of an industrial metal. That, let's say we've shifted from 50-50, half investment, half industrial. And we've even gone, which I think is pretty much the case now, we've gone in the last few years to 60-40, meaning 60 industrial, 40 investment. What that says to me is, of course, these can continue to shift. This is not set in stone, but I believe a lot of the industrial demand is very robust, even in an economic slowdown, because so much of it goes to solar, electronics. There are many applications now, and because of the energy transition, a lot of these uses are almost difficult to kind of wind down, especially solar, for example. So much of that is going to continue to grow for multiple reasons. But I think that the industrial demand side of it will stay quite steady. But because it's grown, and if let's say it stays and doesn't continue to grow, but let's say it stays over the next few years at 60%, this new smaller portion that's available for investment, now 40% rather than 50%, to me means that when people do turn to silver as a monetary instrument, the way they did in a very big way in 2021, and even the year after, I think it was 2022, it was quite high, over 200 million ounces again. When they do shift to that, and that's going to happen again because it's It's a very sort of flowing kind of situation, and there's a lot of FOMO involved. People are, when they see that move, they kind of jump into it quite quickly. All that means to me is there's even less silver available for that portion, for the investment demand. So I think that's going to just make it rocket even higher, because if you've got this more limited supply for this particular use being investment, and people will really come back to it in a big way, the demand's going to just push the price of silver up even faster. So I think, we're going to be in for a silver squeeze, sort of 2.0 or 3.0, within the next probably couple of years. I do think that's something like that's going to happen.
Even if gold doesn't hit the $3,000 mark this year, it remains a viable long-term target. In the short term, traders should keep an eye on support levels and brace for potential consolidation, but the broader outlook for gold continues to look strong. Given these developments, how do you foresee gold and silver performing in the next few years? And do you believe it will outshine gold as the top-performing precious metal? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.